Hello, welcome to the European Open briefing for Wednesday, March the 15th. I'm Rafi Barjan, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So much of the focus this morning is, of course, on the FOMC announcement due later today. The dollar is trading in a very narrow range ahead of that all-important announcement. The euro is a little bit firmer this morning as voting gets underway in the Netherlands for a general election. The pound, though, is seeing a bit of volatility. It jumped higher a short while ago for no particular reason. Rather, it's mainly due to thin trade that's causing the volatility. As markets await that for Prime Minister to formally start Brexit negotiations, but ahead of that triggering of Article 50, the pound is lacking direction, so that could cause further volatility down the line. And in commodities, we're seeing higher commodity prices, including oil, which bounced higher late yesterday after API inventory data showed a drawdown in US crude stocks. And commodity currencies such as the Aussie and the Kiwi are also doing better this morning. But let's begin with the dollar-yen pair. We can see in the chart that the dollar has been pretty much range-bound this week. It's currently trading at around 114.60 yen. We have the FOMC announcement at 18 hours GMT, where a 25 basis point rate hike has been pretty much priced in by the markets. Fed Chair Janet Yellen will also speak at a press conference 30 minutes after the announcement. So there's going to be a lot of focus on what she's going to say about the US economy and also on the rate hike path for the Fed. And of course, we're going to have the quarterly economic projections by the FOMC members. It is possible that the committee members might up their forecasts from from 3 increases in 2017 as projected back in December to possibly 4 rate hikes in total in 2017. And such a move would probably cause the dollar to jump higher. We're also going to have very important data, US data later in the day. We're going to have US inflation and retail sales numbers for February. So that will also be important just before the FOMC announcement. Moving on to the euro now, we can see that the euro had been drifting lower and it came under pressure yesterday. It's bounced back a little bit this morning. It's currently trading at 1.0635 against the US dollar. We have, of course, those elections in the Netherlands taking place right now. The far-right party, the PVV, who's being led by the controversial Geert Wilders, who's known for his anti-Islam and anti-immigration views. The PVV party has fallen to third place according to some polls, and that could potentially be one explanation for why the euro is up this morning. But even if the PVV party was to come first, it's unlikely they would be able to form a coalition to have a majority in parliament. So there's unlikely to be any immediate impact from the Dutch elections, but nevertheless, it's a key test as to the anti-immigration and anti-EU sentiment across the continent. So if we see a strong swing towards such parties, it could potentially set the mood for the French presidential elections in April, which is going to be more important. Moving on to the pound now. The pound jumped higher earlier today to back above $1.22. There was no particular reason for that, just basically due to probably orders being placed. So much of the focus now is on when Theresa May will begin formal Brexit negotiations. This is unlikely to take place before March 27, so March 27 is the earliest that markets see the triggering of Article 50 taking place. But apart from that uncertainty and wait till for that to happen, there's other bearish sentiment for the pound, particularly signs of slowing economic growth and the renewed threat of a Scottish independence referendum as well. We've got UK unemployment data coming out later today, so that might cause some further fluctuations in sterling. Let's have a look at the Kiwi and the and the Australian dollar now. The Kiwi was boosted a little bit from a smaller than expected current account deficit in New Zealand in the fourth quarter, which was the smallest in 2 years. The Aussie is also not doing too badly this morning. We had consumer sentiment data by Westpac, which showed a very marginal increase in consumer confidence in March, but new vehicle sales fell by 2.7% in February. But that mixed data was outweighed by overall stronger commodity prices this morning, which is boosting the Aussie to just below the 0.76 level against the dollar. And oil is also up this morning. We can see that big drop yesterday before the rebound came. They hit a fresh 3.5 months low after OPEC report showed that there was an increase in global stocks and also that Saudi Arabia apparently raised its output in February, although that might have been misinterpreted because there's two sets of figures measuring Saudi Arabian output, so in fact that wasn't too significant. But nevertheless, the market reacted negatively to all of that yesterday. But later on, we had the API inventory numbers out of the US, which showed US crude stocks fell unexpectedly last week, and that boosted prices back about $48 a barrel. So we've got the official US Energy Department numbers coming up later today. That's going to be watched as well because it's going to be the official inventory numbers. But if we look at today's economic calendar, the focus is pretty much on the US. In Europe, we only have the UK unemployment data coming up shortly. As mentioned, we've got US inflation and retail sales before the Fed's announcement at 18 hours GMT and the press conference. And also, let's not forget, Bank of Japan is also due to meet tomorrow, where they will probably keep policy unchanged at their latest policy meeting. That's it from me. Thank you very much for watching and have a great day.